Chapter 12 Mergers and Acquisitions, and the topic Merger and Acquisition Valuation. Chapter Learning Outcomes. At the end of this chapter, students should be able to first choose the best method for corporate merger and acquisition based on cash and share method. Second, students should be able to apply the theory of defensive tactics to prevent from corporate merger and acquisition. Chapter outline. There are three topics that we'll cover in this chapter. The first is NPV, which is net present value of a merger, either cash or share basis. The second topic is under defensive tactics. And the last topic is under mergers and acquisition valuation. In this video, I will explain all of the calculation under topic 3, which is mergers and acquisition valuation. As an introduction, in this chapter, students will learn all calculations under topic mergers and acquisition. The examples of calculation such as post-merger market value, which is VAV, post-merger market price, which is MPAV, and post-merger net present value, which is NPVAV, based on the two methods, either cash basis or stock basis. What is a post-merger? Post-merger represent the market value, the market price, and also net present value after the two companies are merged together. What is a cash basis and also stock basis? Cash basis or cash merger happens when the acquiring firm buy the target company stock with cash. Meaning that under cash basis, the mergers and acquisition will be happen by cash payment. And stock basis, or the other name is a stock merger, happen when an acquiring firm offer stock rather than cash to complete a merger deal. It converts the target company shares into share in the combined firm. Under stock basis, it represents that the company will purchase another company by take the share of the company. There are two companies involved in merger process. The companies are acquiring company, which we identify it as A company, and a target company, which will use the B term that represent the target company. An acquiring company, which is A company or also known as a bidder company, will take over target company, which is B, either by cash basis or stock basis. In this chapter, it is important for you to identify A and also B company. For your information, A is represented as an acquiring company, which is a big company, a stable company, and a well-established company that have a potential to take over another company, which is a small company that we call it as a target company or B. So it is important for you to understand the concepts of acquiring company and also a target company. And to calculate for all calculation in this chapter, you should know several lists of the formulas. The first formula is regarding synergy or incremental value of the merger. So what is a synergy? Synergy represents the benefit that the companies can gain after the merger process. And to calculate for the synergy, the formula is equals to share A, which is represent number of share for the acquiring company, which is A company, divided with share B, which is number of share for the B company, which is a target company. The second formula is regarding market value A, which is VA. The market value A represent the market value of the acquiring company, which is A company, that equals to MPA, represent by market price of the A company, time with NOSO A. NOSO here represent number of share for the A company. The third formula is regarding market value for B company, which is the market value of the target company represented by VB, and the formula is equal to market price B, which is MPB, time with NOSO B, which represent number of share for the target company. The fourth formula is regarding value of B to A, which is V star B, and the formula is equal to VB, represented by market value for B company plus with the synergy. For the formulas number 5, which is regarding merger premium per share in RM, the formula is equal to cost of the merger divided with number of share for the B company minus with the market price of the target company, which is MPB. And for the next formulas, which is under total merger premium in RM, the formula is equal to cost of the merger minus with the market price of B, which is MPB, times with number of share B company. What is the difference between formulas number 5 and also formulas number 6? For formulas number 5, you will calculate merger premium per share. While for number 6 formulas, that's represent the total value of the merger premium. And for formulas number 7, you will calculate merger premium per share but in percent. And the formula is equals to merger premium per share, which is the merger premium per share in RM divided with market price of B times with 100, since the formula is measuring by percentage. The formula number 8 is regarding total merger premium in percent, that equals to cost of the merger minus with market price B times with NOSO B, which is number of share B, divided with market price B times with NOSO B, and times with 100. And for formulas number 9, the formula is regarding number of share outstanding or NOSO. So how you can calculate for number of share outstanding for each of the company, either company A or company B, that is equivalent to common stock value divided with the par value. And based on formula number 10, to calculate cost of the merger, if there is no information regarding cost of the merger in the equations, so you need to calculate the cost of the merger itself. And to calculate for the cost, formula is equal to price to acquire per share times with number of share B, which is NOSO B. And for the formulas number 11, is regarding the calculations on earning per share, which is EPS for pre-merger. The formula is equals to EAT, represented by earning after tax, or the other names is net income, minus with the preferred stock dividend, and will be divided by NOSO. And for the next formulas regarding earning per share, which is EPS for the post-merger, the formula is equal to EPS A times with NOSO A plus with EPS B times with NOSO B, and will be divided by NOSO A plus with no so new. And for the last formula regarding price earning ratio, which is PER for the post-merger, the formula is equal to MPAB, which is market price after the merger happened, divided with EPS, which is earning per share, AB, which is represent earning per share of the merger after the two company are merged. So what is the difference between pre-merger and also post-merger? Pre-merger represent the value of the merger before the two company are merged together. That is pre-merger. Pre-merger represent before merge, while post-merger represent any calculation related with the formulas when the company are merged together. So post-merger represent the process after the merger is happened. And for these 13 formulas, that is the basic formula that you will apply for the calculation. Next is the formulas that specifically focus for the cash basis. So under cash basis, there are three formulas that you should know. The first formula is regarding post-merger market value, which is VAB. The formula is equal to VA, which is market value of A company, plus with BB, which is market value of the B company or a target company, plus with the synergy and minus with the cost of merger. And the second formula is under post-merger market price, which is MPAB, where the formula is equal to VAB, represented by market value after the merge, divided with number of share outstanding for A company. And the last formula is regarding net present value, which is NPV, and the formula is equal to V star B minus with the cost of merger. And for the stock basis, or the other name is share basis, is also have several formulas that you should know. The first formula is regarding post-merger market value, which is VAB, and the formula is equal to VA, represented by market value of A company, plus with VB, which is the market value of the target company, plus with the synergy. The second formula is on post-merger market price, which is MPAB, and the formula is equal to VAB, represented by the market value after the merger process, divided with NOSO AB, which is number of share outstanding after the merger process. And to calculate for the number of share outstanding, which is NOSO AB, the formula is equals to number of share outstanding for A company plus with number of share outstanding new. That formula is represented by formula number 3. And then to calculate for number of share outstanding new, which is NOSO new, there are two formulas available depending on the ER, which is exchange ratio. If the exchange ratio is given in the equations, you should refer to formulas number 5. But if the exchange ratio is not given in the equation, to calculate no so new, you should use formula number 4, which is represented by cost divided with MPA. And then for formulas number 5, regarding number of share outstanding new, if the exchange ratio is given in the equations, will be equals to exchange ratio, which is ER, time with NOSO B. And the next formula, which is formula number 6, is regarding net present value, which is NPV. And the NPV equals to B star B minus with the true cost. For your information, the other name of the true cost also can be called as the actual cost. So to calculate for the true cost or the actual cost, formulas will be equals to not so new time with MPAB for the stock basis. So here are the 7 formulas that is related for the stock basis calculation. And to start for your calculation in this chapter, you should refer to the examples of the question. Based on these examples of the question, Hana Corporation is planning to acquire Butterfly Berhad for expected synergy of 80,000. So at first, before you start with the calculation, it is important for you to determine which company is A company and which of the company represented by B company. So how you can determine the company, either A or B company, will be based on the statements given in the question. So based on the first statement, Hana Corporation is planning to acquire Butterfly Berhad. So based on this statement, means that Hana Company will take over the Butterfly Company. So based on this information, we can know that the Hana Corporation is the acquiring company represented by A company, and the Butterfly Berhad is a target company which represented by B. So Hana is A company and Butterfly is a B company. Okay, and then based on the statement also, the expected synergy of 80,000. So this is the information on synergy equals to 80,000. And then Hana can acquire Butterfly for 2 ringgit and 50 cents per share in either cash consideration or exchange 3 of each share with every 4 share of the target firm in stock consideration. So based on this statement, it was mentioned that Hana can acquire Butterfly for 2 ringgit and 50 cents per share. So this value of acquiring represent cost to acquire per share. Cost to acquire per share. Represent by 2 ringgit and 50 cents. Either cash considerations or exchange 3 of each share with every 4 share of the target firm. And based on this statement, exchange 3 of each share with every 4 share of the target firm. So this is the information for exchange ratio of the stock basis, where the exchange ratio based on the formulas is equivalent to number of share A divided with number of share B. So how much is regarding the number of share? So based on this statement, exchange 3 share with the 4 share of the target firm. So meaning that number of share for A is 3 is given and divided with 4 share of the target firm, which is number of share B represented by 4. So based on that statement, we can know that the exchange ratio for the stock basis represented by 3 over 4. Next, the financial data for Hana Corporation and Butterfly Berhad are as follows. The other relevant information for Hana Corporation, so as we determined before, so Hana Corporation is A company and Butterfly Berhad is the B company. Okay, and then based on the information, it was given that the common stock amount for Hana Corporation is 150,000 with the par value equals to 1 ringgit and 15 cents. So next information is regarding market price per share. So for market price per share, that is represented by MP. So the market price per share for Hana Corporation represented by MPA equals to 3 ringgit. And for market price per share under Butterfly Berhad, which is MPB, equals to 1 ringgit and 50 cent. And the third information is regarding earning per share, which is EPS. So earning per share is equivalent to EPS. And then EPS for Hana Corporation is represented by EPS A equals to 25 cents. And earning per share for Butterfly, which is EPS B, equals to 18 cents. And next is regarding common share outstanding. Common share outstanding here represented by NOSO. So NOSO for Hana Corporation is not directly given in the question, but NOSO for Butterfly Berhad, which is NOSO B equals to 50,000 unit. And the informations on the corporate tax, which is the tax for the Hana Corporation, is 34%. And based on the information, there are 4 questions that you need to be answered. The first question is calculate the merger premium in percentage for the proposed cash acquisition. And then the second question is calculate the post-merger price per share based on cash and stock basis. The third question is determine the post-merger earning per share, which is EPS, for shareholder of Hana Corporations and Butterfly Berhad for the proposed stock acquisition. And the last one is calculate the net present value, which is NPV of the merger based on cash and stock basis. And to answer for all of the questions, at first, it is important for you to calculate the basic calculation that you will use to support your answer. Okay, so for the basic calculation, so you can calculate the basic calculation for Hana Company and also Butterfly Company. So what is represented by basic calculation? So this means that is the calculation that commonly used in this calculation for this chapter. So when you are calculate the basic calculation first, meaning it is more easy for you to answer with the other questions. Okay, so first, we should calculate NOSO for A company, since number of share for A company is not given directly in the question. So you can calculate number of share outstanding by using the formulas common stock value divided with the par value. And it was given in the question, the common stock value for A company equals to 115,000. And then divided with the par value of the common stock is given at 1 ringgit and 50 cents. So you will get number of share outstanding for A is 100,000 units. While for Butterfly Company, which is for B company, it was given in the question that number of share outstanding for B equals to 50,000 unit. The next basic calculation is regarding market price of both company. So it was given in the question that the market price for A company is 3 ringgit, while for market price for Butterfly Company, which is B company, equals to 1 ringgit and 50 cents. And then next, you should calculate VA, which is market value of the A company and also market value of the B company, represented by VA and also VB. The formulas for VA equals to MPA time with NOSO A. So MPA equals to 3 ringgit time with NOSO A 100,000. So you will get the VA, which is market value for A, equals to RM 300,000. While for Butterfly, VB, formulas equals to MPB time with NOSO B. MPB equals to 1 ringgit and 50 cent time with NOSO B 50,000. So you will get the answer for market value of B equals to 75,000 ringgit. Next information is regarding synergy. So since synergy is also given in the question, so you can directly take the amount of the synergy equals to RM 80,000. And then you also need to calculate in terms of the cost because cost is not given directly in the question. And to calculate for the cost of the merger, formula is equals to price to acquire time with no so B. And based on the information, price to acquire the target company equals to 2 ringgit and 50 cents time with no so B, which is 50,000 unit. So you will get the total cost of the merger amount RM 125,000. And the last one, for the basic calculation, before you can start answering for the questions, is to calculate V star B. And the formulas for V star B equals to VB plus with the synergy. So the amount for VB, which is market value of B, is 75,000 plus with the synergy given at 80,000. So you will get V star B amount equals to RM 155,000. After you calculate all of the basic calculation to help you easily answer for all of the questions. So now you can start answer for the question. So for question 1, calculate total merger premium in percent, and based on the formulas and the total merger premium in percent, the formula is equal to cost minus with MPB time with no so B and divided with MPB time with no so B, and all will be timed with 100. So you just add all of the information into the formulas. So the cost equals to 125,000 minus with MPB, which is 1 ringgit and 50 cent, time with no so B 50,000, and divided with MPB 1 ringgit and 50 cents time with no so B 50,000, and all will be timed with 100. So you will get the end answer for total merger premium in percent equals to 66.67%. And for the second question, which is under calculation on post-merger price per share, which is MPAB, for cash and also stock basis. So you can start calculate MPAB based on the formulas and the cash basis and also stock basis. So for the cash basis, based on the formula, MPAB will be equals to VAB, which is market value of the post-merger divided with no so A. And to calculate for MPAB, at first you should start with a calculations of VAB under the cash basis, and the formulas equals to VA plus with VB plus with synergy minus with cost. So VA is 300,000 plus with VB 75,000 plus with synergy 80,000 and minus with the cost 125,000. So you will get the answer for VAB, and the cash basis is 330,000 ringgit. And based on this information, so you can now answer the question by calculate MPAB and the cash. So MPAB cash equals to VAB 330,000 divided with no so A 100,000. So you will get the end answer for MPAB cash basis is RM 3 ringgit and 30 cent. That is on the cash basis. And for the stock basis or the share basis, to calculate MPAB, the formula is equals to VAB for the stock basis divided with no so AB. So at first, before you can calculate MPAB, you should calculate VAB under stock basis first. So based on the formulas, VAB stock basis equals to VA plus with VB plus with synergy. VA is 300,000 plus with VB 75,000 plus with synergy 80,000. So the answer for VAB is RM 455,000. And then after you calculate VAB, so next you should calculate NOSO AB, which is number of share outstanding for the post-merger and the stock basis. And the formulas is NOSO A plus with NOSO new. And based on these formulas, before you start calculate for NOSO AB, you should calculate for NOSO new. And to calculate for NOSO new, if you are looking back into the list of the formulas, there are two formulas available to calculate NOSO new. The first formula is regarding formulas if the exchange ratio, which is ER, is not given in the equation. And the second formula is regarding the formulas if the exchange ratio is given in the equation. And based on the information in the equations, it was mentioned that the exchange ratio for the company is 3/4. So since the exchange ratio is given in the equations, so means that to calculate for the NOSO new, you must use the formulas based on the exchange ratio is given, where the formulas is equals to exchange ratio time with NOSO B. So the exchange ratio is given at 3/4 time with NOSO B 50,000. So you will get the answer for NOSO new is 37,500. And based on this answer of NOSO new, so now you can calculate NOSO AB. So NOSO AB equal to NOSO A 100,000 plus with NOSO new 37,500. So you will get the answer 137,500. And based on the answer of NOSO new, so now to answer for that question, so you can calculate MPAB based on the stock basis, where the formulas is VAB 455,000 divided with NOSO AB 137,500. So at the end, you will get the answer for MPAB under stock basis is 3 ringgit and 31 sen. So if you are looking at the two answer under cash basis and also stock basis under market price per share for both of the basis, so you can see that the value of market price per share under stock basis is higher than the value of market price under cash basis. So now we move to the third question to calculate post-merger earning per share, which is post-merger EPS. And based on the formulas under EPS post-merger, the formulas equals to EPS A time with NOSO A, which is equivalent to 25 cents EPS A time with NOSO A 100,000 plus with EPS B time with NOSO B, where EPS B is given at 18 sen time with NOSO B 15,000 and divided with NOSO A 100,000 plus with NOSO new, which is 37,500. So at the end, you will get the answer for EPS post-merger is at 25 sen. And the last question, which is question number 4, to calculate net present value, which is NPV for cash and also stock basis. So for cash basis, based on the formulas NPV and the cash basis, the formula is equal to V star B minus with the cost. So the value of V star B is 155,000 minus with the cost 125,000. So you will get the answer for NPV cash equals to RM 30,000. And for the stock basis, to calculate for the NPV plus equal to V minus with the true cost. So before you can calculate for the NPV, you need to calculate the amounts of true cost or the actual cost first. Based on the formulas of the true cost, it was equals to no so new time with NPAB of the stock basis. So no so new is given at 35,500 time with NPAB stock, which is the answer from question number 2, equals to 3 ringgit and 31 cents. So the amounts of true cost is 1 to 400,000, 12500. And based on the amounts of true cost, now you can calculate for NPV under stock. So VRB is 155,000 and then minus with the true cost 1 to 400,000 and 125. So you will get the answer for the stock basis is RM 30,875. And if you are looking by comparing the value of NPV under cash basis and also stock basis, you can know that the value of stock basis for NPV is higher than the value of NPV under cash basis. And based on the informations or based on the answer for calculations under market price, which is NPAB and also NPV, you can come up with the decision making either to choose cash basis or the stock basis. So if the question asks to make a decision either to choose cash basis or the stock basis, you can choose based on the higher market price, which is based on the NPAB, or based on the higher net present value, which is based on NPV. So to choose for the best decision, either cash basis or stock basis, you must look at the higher value of MP, which is market price, or the higher value of NPV. And if you are answering for this question to come up with the decision making, so you can say that you should choose stock basis because higher value of the market price, which is higher value of NPAB, and also the higher value of net present value, which is NPVAB, while comparing to the cash basis. So that is the way on how the calculations and the NPV method will be happen under topic mergers and acquisition 2. So that's the end of the chapter. Thank you.